Welcome back, listeners. My name is Larry Colvig, founder and CEO of the Haven Financial Group. And if you're just tuning in, you're listening to the Haven Financial Group radio show, where weekly we discuss crucial retirement and financial topics that can make the difference between surviving retirement and thriving through those wonderful golden years, which we want them to be golden. However, a lack of planning may lead to the wrong destination. It's why 10 years ago, Haven Financial Group, we all kind of like the lake. We all like water, and we have a nautical theme. We have a ship's wheel above our front desk, and the reason is if you get off 1 or 2 degrees, you might end up in the wrong place in retirement, and that's what we're helping people avoid. Is you get to the true destination of where you want to be in retirement. So if you're listening, feel free to give us a call at 612-504-8400. Visit us online at havenfinancialgroup.com. I know it's the holiday season, and we wish you Merry Christmas and all the happy holidays. However, now is a great time to schedule a time to come visit with us. The new year is approaching, New Year's resolutions. You've been thinking about an estate plan for 35 years, and you still haven't done it. You're not doing any tax planning. You don't even talk to your tax preparer. Whole bunch of retirement puzzle pieces. Do you have the pieces, or are you missing some? Why not start the new year out the right way?
Absolutely. Again, that number is 612-504-8400. That's how you get hold of the folks there at Haven Financial Group. Home is the heart of your financial security. That's what we've been talking about, and your financial strategy, by the way. And that's what we've been talking about today. We've been talking about your home and how it plays a role in your retirement. Lots of moving parts when it comes to your retirement. Your home is probably one of those. And maybe you're someone who's been thinking, we are in retirement, the kids are gone, this is a big house, there's a lot of stairs, it's a lot of cleaning. It's worth some decent money here, and it's time to get out of it. So before you do that, there's some things that you really, really want to consider. So Kyle, let's start with you. The first thing is, people need to understand really what their house is worth, what they bought it for, and maybe what it was worth, 10 years in may not be the same thing that it's worth now.
Absolutely. We get so emotional with our financial assets, like our investments and stocks, all of that stuff. But we also get very emotional with our homes. It's where we spend a lot of time. Most of our time on this earth is spent in our homes, right? And you put years in there and you make it your own. And, naturally it's going to be worth more to you than someone that's just going to come in and buy it, right? But we have to detach ourselves emotionally from that price, because a home is worth what someone's willing to pay for it. Right. There is no, stock exchange where you can go see what's this thing worth. Zillow can give you an estimate, but it's not exactly correct. Right. It's a market system. What's the demand for it? And then how much is someone willing to pay? There's also a lot of things to consider that are going into play there too. There's a lot of new builds going on right now. So if someone can get the same square footage, same bedroom, same bathrooms in a new build as your current house, that's someone's going to prefer a new build, right? So we just have to be realistic about what that home is actually worth, and pricing that accordingly, and getting the fair market value out of that. Sure. And on top of that, there's a big cost to relocation, right? These are
those hidden costs, right? That people don't think about. You're right.
Exactly. Yeah. There's a lot of different, changes in lifestyle that can happen by moving from one city to the next. Your property taxes, for one, could be a dramatic increase or decrease, hopefully. Then there's also, gas prices. Gas prices change quite a bit from city to city, especially if you're going traveling further distances. But then restaurants, social clubs, or workout clubs, right? All of these different things can make it more expensive or less expensive, just depending on where you're at too, because there's stigmas with different cities, right? So if you're looking at Edina, right? That's going to be a more expensive place. Just everything's more expensive there. It seems like going out to eat, going shopping, all of that, right? So you just got to keep all that in mind because there is more cost than just the price of the home.
Absolutely.
Kim,
You
if
mentioned,
Kim, if
oh,
I could
sure, go
add to
ahead.
that, the grass isn't always greener on the other side. Okay.
Right.
One we hear often because, let's face it, Minnesota is a high tax state. I think listeners would agree, a very high tax state. So what we hear often is, I'm going to move to Texas. I'm going to move to Florida. I'm going to move to South Dakota or one of those other states, which I completely get. I understand the whole concept with it. But I think of Randy, who used to live in Lakeville here, and him and his life partner, they moved to South Dakota. And about every quarter, he comes back and we visit. And, he's like, South Dakota is fantastic. He's out on the western side. He goes, but man, I didn't realize the property taxes were so expensive out there. So we always encourage folks, if that's your plan, check out all applicable expenses and taxes relative to that state. Because yes, it may seem on the surface that it's much better, but make sure you do what you should to find out all the true costs associated with moving. What the benefits are, what the downside is. Talk through it, and maybe you have some rental properties. Just this last week, I had somebody. They did a 1031 exchange. So when we're looking at all these ideas, we're incorporating the properties. If somebody has, we're talking. We're incorporating the investments. One thing the investment team does well is tax loss harvesting, whether that's with real estate or the investments. We can say we save people money every year by doing this. So it's the full retirement approach. It's making sure that the investments go with the estate plan, go with the insurance, they all work together. And if they're not working together, they work apart. And that's what we're trying to avoid in retirement.
Absolutely. I'll tell you another thing that people have to think about, and that would be capital gains tax and what that might do to you. Explain that just a bit, if you would, gentlemen.
Yeah. So there is capital gains that can be taxed for your house. So, for example, a single person can have $250,000 of gains on their house before they start having to pay tax. So if you buy a house for $250,000, you sell it for $500,000 as a single person, you're going to have no capital gains tax. Well, if you bought it for $250,000 and you sell it for any amount over $500,000, you're going to pay capital gains tax on the amount that's over $500,000. Now, for joint married people, you get $500,000, so $250,000 each for gains. So if you buy something together for $250,000 and then you sell it for $750,000, that's going to be completely tax free. But you're going to have to pay capital gains tax on any amount over $750,000. So sure. There is taxes that can come into play. Typically, that's it. You're going to have to live in that house a pretty long time in order for that to come about for you, though. So, there are many people that we meet with that have been in their houses for 20 years. And if they decide to sell that house, that could actually be a realistic scenario where they end up, paying some taxes. So, and also you do have to live in that house for 2 of the last 5 calendar years in order to qualify to not pay taxes for, the $250,000 and the $500,000. So as long as you're living in that house for 2 of the last 5 years, you don't pay capital gains tax. If you were to only have lived in a house for 1 year and you have gains, you're going to have to pay tax on those gains. So you just got to be there 2 years to not pay that tax.
And as we continue to talk about, little hidden expenses that maybe you're not thinking about because you've lived in your house for 25 or 30 years, you haven't sold a house. This is an interesting one, the double closing costs. Can you guys address that? That's just something people need to keep in mind.
Yeah, closing costs can be very expensive, when you take into consideration, just the closing costs themselves, but then also realtor fees. Before you know it, selling your house, you're paying, 6%, but then you're also going to be buying something else where there's going to be other fees as well. And Minnesota had some new rules, come about this last year where, buyers agents are paid differently now. And I'm not an expert on that, but, the costs are definitely in there, and you should expect on both sides that you're going to be, paying upwards of 5 to 6%, for each transaction. And
Sure.
that's when we're talking, $500,000 house, that's a lot of money.
Right.
And that's something that we need to account for, because yeah, you could list your house for 500,000, but what are you actually going to receive from that after the closing costs and the realtor fees? So,
Mhm.
And I'll add to that. I always say nothing's free, okay? But what value are you getting for what you're paying? Understanding the costs and what is that value? And I'll take it full circle to conversations we have with folks. I ask folks, what are you paying your guy or gal to manage your money? Maybe you do it yourself, and that's fine. But it may come a day where you don't want to and you want to rely on a professional. We do wealth management, obviously, with Fidelity and Charles Schwab, and we're not small by any stretch. In fact, we're growing rapidly. But I ask folks, what are you paying? And you know the answer I get 75 to 80% of the time?
I don't
Larry, that's
know.
a really good question. We have no idea. And my point is, why don't you know?
Right.
Why don't you ask? Why isn't there transparency? You don't have to pay 2 to 3 times the going rate all in. You don't have to. You can if you want to. But the problem is most people don't know. It's a very competitive industry, and you should not be afraid to ask that question. We believe transparency should be expected. You truly shouldn't have to ask, but if you have to, don't backpedal and don't walk away from it. Find out what you're paying, or let's get a second opinion, and we'll do a cost analysis and we'll do a comparison. So
Sure.
it's just one piece to that retirement puzzle. What costs can we control and what costs can't we control?
Absolutely. 612-504-8400. You can control your ability to go to the phone and call the folks at Haven Financial Group, sit down and chat with them about a retirement portfolio and any questions you might have related to retirement. For that matter, money management also in there, and obviously the subject that we've been talking about today, and that being your home and transferring the wealth of your home either to you or to the next generation, and that is the subject of our next segment here on the Haven Financial Group Radio Show.